let's get started discussing momentum. Now, even though we call it Forex momentum, momentum is momentum, whether you're looking at a cryptocurrency, whether you're looking at the euro, whether you're looking at Apple or Google. Now, we know the word momentum. Momentum is a word that we hear used colloquially in everyday life. We are often told that the sports team and political candidates have lots of momentum. In this context, the speaker usually means to simply imply that the team of the candidate has had a lot of recent success, and that it would be difficult for an opponent to change their trajectory. Let's hope. Let's hope that right now that Mr. Biden can keep his momentum going. Now, momentum is the quantity of motion of a moving body. That's a more technical way of explaining it. In a basic sense, the more momentum a moving object has, the harder it is to stop. So it's imagine, we always talk about that, stone running, rolling down the hill. The more and more momentum it gets, the harder and harder it is to stop. And that's true in everything. Therefore, you see the term used metaphorically, like in the example of a sports team. It means that the team is on a roll and is becoming a stronger team for it. And the other teams will have a harder time stopping the team gaining momentum. Now, many Forex traders, especially new traders, can feel lost and confused in the markets. They feel that they can make money, but they can't find a way to achieve it with any consistency. Some end up saying the market is random. Yeah, this is just an excuse. Now, the fact is, my firm belief, my opinionated experiences, I believe that the markets are completely random because they're made up of thousands and thousands and thousands of human beings making decisions, many making emotional decisions. But there are certain times that the markets exhibit non-random behavior. And these non-random behavior or non-random periods are defined as trends. And those trends can have momentum. So one of the key tenets of technical analysis is that price frequently lies, but momentum generally speaks the truth. Good saying. Price frequently lies, but momentum generally speaks the truth. So first, we need to look at why momentum is so important to trading. So let me pop up real quick on your screen the Euro-US dollar chart. Now look at that. We're going to go back, and this is the current chart. So we can see that the Euro-US dollar has got a lot of momentum. It's been trading upward steadily. And as it's gaining this momentum, round and 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 round it goes. More and more traders are jumping in the markets and pushing the asset upwards. It's very hard to stop that momentum. It will stop on its own. Things will turn around. There will be time when traders start leaving the market. Traders will either get sidelined or they'll think they made enough profit, or something will happen out there, whether it's a freaky little thing that we can't predict, and all of a sudden the markets will reverse. But when the market is moving with this momentum in this hardcore trend, it's very, very hard to stop. Okay, so the best way for me to explain this, if you ever saw a hamster in a cage turning that wheel, he gets in there and he starts puffing and puffing, slowly turning that wheel. And in no time at all, that wheel is turning so fast and he's just down there chugging away, going and going and going. And you're saying, how can he do that for hours on end? because the wheel has really gained the momentum. Even if you were to jump off that wheel, it would keep going round and round and round for a given period of time because it's got its own energy. And this truly happens in the markets. But understanding when an asset has that momentum is very, very important. And then what to do, because you can see that momentum, but be way too late. So a good way to understand the significance of momentum is to step outside the financial markets altogether and look at an asset class that has been experiencing rising prices for a long time, the housing markets. And we're talking right now the US housing market. Housing prices are measured in two ways: month-over-month increases and year-over-year increases. If house prices in New York were higher in November than in October, then we could safely conclude that demand for housing remains firm and further increases were likely. However, if prices in November suddenly decline from prices paid in October, especially after relentless rising for almost a year, then we might provide the first clue of a possible change. So in other words, housing prices were going up, housing sales were increasing. That's a tough market to stop. Now, it may get little hems and haws in it. We might get, Donald Trump doing something crazy. But the fact is, it's a hard market to stop. It doesn't stop on a dime because there's a whole cycle to it. You have the house sale, you have the offer, you have buyers in the market. The buyers are buying up. What's happening? The inventory is getting scarce, so the prices are being driven up. Even if the market's about to reverse, what happens is slowly the inventory on the market starts to increase. As less and less buyers are available, so they're not pushing up the prices as high, but they're still buying. It's not until the inventory starts to rise past the peak of the buyers that what happens is somebody sitting on a house that's sitting too long says, I'm going to ask a little bit less because I need to sell this house because I'm moving to my new house. And that takes a while. So that's a sign that an ultimate trend is ending. So in real estate, month-over-month figures provide a measure of rate of change, which is what the study of momentum is all about. Which, like their counterparts in real estate markets, professionals in financial markets keep a close eye on momentum than they do to ascertain the true direction of a market. I mean, let's go back to the euro US dollar. This is, one incredible example. Let's go back to a one-day chart. Okay, I'm sorry, I've got all my support and resistance lines on here, but look at what has been happening steadily with this euro. But not long ago, the euro was all the way down here at 107, bottomed out at 106, the lowest price has been in years. Okay. It had nothing. We didn't see this momentum. We saw sideways congestion. But then what did we get? Let me lock my drawings on here. Look at what we started to see. And now look at what we have starting in July. We started to have momentum. This market started moving up and up and up and up and up. Now, if we could have seen that and been aware of it, just think of all the trades we could have made. Look at that. The market has been unstoppable. Okay, since it started moving up from the 107 range all the way to reach 119. And we're talking about in a matter of 2 months. Who would have seen the euro climbing to this degree? But once we spotted the momentum, we could have taken advantage of it. So we need to understand momentum. Now, my friend Mark does a great job explaining momentum. And then I recorded his class to share it with my students. So I want to share it with you. He's a little bit hyper. Maybe he's speeding, got too much momentum, but he explains this very well, and I want to share it with you. And then we're going to go on and talk about how to apply it directly into our trading.
biggest pitfalls we've got to avoid. Okay, so the law of momentum basically says that an object in motion will continue in that motion until you get an equal force in the opposite direction. I probably absolutely butchered that, but you get the idea, you know the whole point of it, right? So that is what we're defining as momentum. The idea being is that, if a stock's in an uptrend, the theory is it's going to continue in that uptrend. More likely is it's going to continue in the uptrend than it is to reverse. And that makes sense, that's logical, same with a downtrend. So the point of momentum trading is what we're looking for momentum, and we're looking to jump on that momentum and let it carry us, forward, long if we're long, down, short if we're short. That's exactly what we're looking to do. So what are the pitfalls, and what are we looking for with momentum? So first of all, we're defining momentum as literally, an exaggerated movement in one direction. Now, some people will define it differently and say, well, it's just an uptrend. Some people will define it and say, well, it's just, a steady move up. Whilst I accept there's some momentum there, if something's trending quite nicely, even if it's slow, shallow trend, there is momentum. Really, for me, momentum trading is, hey, there's a good amount of move coming in this. I'm expecting it to continue. How can I get involved in it? So first of all, you're kind of looking to say, is it true momentum? Because listen, honestly, this is the sort of thing that I know I've made the mistake many times before, is you're trading a momentum strategy and you jump on board stuff that is not momentum. It's just noise. It's just a little burst of volatility and you end up buying at highs or selling at lows or whatever. So you've got to be sure that this thing is momentum. So you've got to be sure it's true momentum. So you've got to give it some time to kind of work out. You've got to look at volume, you've got to look at distance. If you're swing trading, it's like how far has it moved in a week or in a month, or is there volume there? What's the catalyst for it? Is there a reason why people are coming? Great data, bad data, all this kind of stuff gives you an idea, and you can say, yeah, you know what, there's some true momentum here. It's not just a price spike from nothing, it's genuine momentum here. So number two is trying to find my entry point. Now, obviously, the danger you have is if it's real true momentum, you're not going to find many pullbacks. An example would be, let's say we have, I don't know, some sort of, news that comes out that eventually filters over the wires that's very, very bullish for the market, whatever that may be. Okay, and we see momentum, the price is moving up, moving up, moving up. I'm looking on data on an intraday chart here, it's moving up, and then as it gathers more and more steam, it just starts to really rip to the upside. You're not going to get opportunity to buy a pullback. So you've got to make the choice. You kind of say, okay, I need to make sure that it's true momentum first before I dive on it, because by the nature of it, I'm probably going to be jumping in at highs. Obviously, that's from a day trading perspective. If you're swing trading, you kind of still have that thing. And if you look at some of the kind of charts that have got a lot of momentum in the past few years, you'll see they really, again, they didn't give anyone a chance to get in. So you've kind of got to make the decision. Do I jump on it? If I jump on it early, I'm going to have to definitely chase, but I'm not going to be as sure that it's momentum, and I may risk getting stopped out, and I may risk being the guy who's bought at highs. So there's that. Or I wait to confirm that it's true momentum, that it's got a lot of weight behind it, that it's going to run, wait for the pullback, wait for a good entry, and then strike. Now, of course, the downside is the bulk on the early move will have gone, but you still know there's momentum. You might not be so much in the trade. So you've got to kind of play the game between the two. So momentum trading is literally jumping on that burst of move, that drive, that kind of push, that shove that really you can see there's a lot of volume behind it. There's a lot of institutional buying. There's a lot of participants involved in it. And your job as a trader is purely to jump on that train, run it, ride it for as long as you can, and hop off, almost like a surfer. The wave's coming in, you've spotted it's a good wave, you jump on it, you ride it as far as you can, and you jump off before it smashes onto the shore and pummels your face into the reef or whatever it may be. So that's the job of a trader, and trading momentum works very well, I find, when it's an extreme environment. So bear market momentum works very, very well. It does work very well. Of course, a bull market works fantastically if you can get in a bull market. That's a lot of growth and a lot of things. I'm defining that slightly differently from momentum trading. I'm saying momentum trading is, hey, listen, it's a multi-day move or multi-week move, much more aggressive than normal, which a bull market tends not to be. However, you do get those bursts, obviously. So you're waiting for the opportunity to shift in supply demand in one way, jumping on it, then jumping off again before it goes back to break even. So that's momentum trading, guys, and the pitfalls.
So, like I said, Mark does a very good job explaining this, and it happens to be that he did this for me quite some time ago. This little presentation I recorded, and what is happening right now? It happens to be that I teach every day, all day long. And what is my teaching chart? The Euro US dollar 30-minute chart. Okay. So right here, we are looking at my teaching chart. And what are we experiencing now in the Euro US dollar? Exactly what Mark was talking about. Here you have this force of momentum pushing this asset sky high. And it's too late. July is gone. August is 3/4 gone. Where would you have even noticed this gotten in the market? Well, we wouldn't want to get up here, but it offers you no opportunities really to find something because it is generally trending straight up. And even the push between higher highs and higher lows is very, very tight. So the object of momentum trading is to say, okay, I see true momentum. And therefore, I know this asset's going to rise. I don't want to get in here. I wouldn't be buying into the euro at 119.3 right now. But if I would have seen this last week or a couple days ago, okay, and here 118 and 116, when this momentum was really building and the hamster was running in that cage, look at that. Anywhere along this point, and even though we would have been saying that's way too high for the euro. Now we have other factors that we know are driving the euro. Dollar's way down because it's a mess in the US, the economic situation in the US, where the Eurozone seems to be recovering. And so the euro is ultimately performing better than the dollar. And the euro was at, like an all-time low. So we've seen the euro steadily climb, like I said, from 107. But if we were to pick this bottom here at, I'd say August the 12th of 1017, we had an easy decision to make to say whether we would have seen momentum. Now, at this point on the 14th and 15th, we saw sideways congestion. We saw beautiful congestion between support and resistance. But then we can see the traders really made a decision. And it's been unstoppable from that point. Okay. So how would we actually trade this momentum? That's a tough question. How would we have placed our stop losses? How do we actually trade momentum? So momentum trading is all about indicators. Which indicators? Excuse me. They're useful for resolving the following kinds of common trader dilemmas, and that support and resistance can't answer. Because support and resistance in this case can help us. But we see as the asset keeps moving up and up and up, it's just breaking support or resistance and stepping up the next level. It's the elevator climbing up and up and up and up and up. It's full of people and everybody's pushing a higher floor and that elevator is rising. So you're going to rise for each one of those floors or each one of those levels. So a currency pair is broken past all prior support and resistance points and is even making new historic highs or lows. Well, we're not going to have that too often, but we have the euro recovering into areas where it hasn't been for quite some time. So you missed entering positions early in a trend that have been going on for a while. How can you tell if there's still time to ride that trend? How can you reduce or eliminate the risk that you're not buying at the top and selling at the bottom? Like I said, I wouldn't enter the euro for anything at 119.70. It's for my blood, it's way, 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 way too high. That's not saying it's not going to climb to 126. You could wait for a pullback, but by waiting, you risk missing even more of the move. You're in a winning trade and you want to ride it for all it's worth. Now, see, if I had entered the euro at 116 or 117 and it had moved up to 119, I'd be a happy camper. And I would just be moving trailing stop losses right on them. But I would have sold half my position already at profit. put my trailing stop loss way above my entry point, so I'm guaranteed to lock in more profit, and rode it out. And then as soon as it came to the next major resistance, which would be the 120 level, sell another half and then move that and keep selling. But this is my strategy, not necessarily yours. But you don't ever want to give back profit in a winning trade, and you don't want to sit there kicking yourself that you got out of a trade way too early and you missed profit. So what are the momentum indicators that we can rely on? What will tell us if that trend is really reached overbought or oversold, or the trend is getting ready for reversal? So that these will help us decide whether the trend is more likely to continue or to reverse direction. Knowing these can help forecast changes. My favorite is, of course, MACD. If any of you have attended my class, it's my favorite indicator all along. But you can use moving averages. You can use multiple moving averages. You can move moving average crossovers. You can use RSI or stochastics for overbought or oversold. So you can use Bollinger Bands, moving average crossovers, moving average convergence and divergence, which is MACD, or RSI or stochastics. Or there's actually an indicator called a momentum indicator. But as the name suggests, momentum indicators focus on the rate of price changes, while the exact mathematical calculation and emphasis vary among momentum indicators. They all attempt to provide a certain perspective, whether price is changing at a faster or slower rate. What we want to know is that hamster in the cage, is he slowing down? Is that as that wheel is going to, even though it's going forward, if it's not going forward as fast, at some point you're going to see it slowing down and he's going to be jumping off. A steady increase in the speed at which price is rising or falling suggests trend strength. However, too rapid an acceleration is often interpreted as a sign of trend exhaustion. Now, I guess one of the best examples is at a certain point, you've built this momentum of traders jumping and jumping and jumping in the market. What's happened is professional traders already were in the market and they're looking for exit points. The short-term traders, the guys like us, we should have been in the market and been riding it out. Okay. At some point, we have a bunch of retail novices or retail guys that are listening to their buddy who's saying, look at that euro, it's really got momentum. It's going to probably go to 126, 127, and they're jumping in and buying. But they don't know exactly why they're buying or where they're buying. They've been told it should go to 120, 123, 127. Okay. And what they are is they're the replacements, because you need that people buying so other people can sell. Because if they're not buying and people are selling, price is going to fall. So too rapid of acceleration is often interpreted as a sign of trend exhaustion or a blow off top. That suggests a final dramatic surge in optimism that drains out the remaining buyers and sets up the end of a trend and the coming trend reversal. So those professionals and those experienced traders who bought it at 116, 115, 117.0 and jumped out at 117.9, okay, they're looking for that reversal. They're out of the market. They're now sitting back and looking for when they can sell at the top to ride it down. So let's see how we could use MACD. The common momentum indicator is a common tool for use to determine the momentum of a particular asset. So let's go over to our Euro US dollar chart again. And let's drop MACD on here. So now we have MACD at the bottom of our charts. Now, does everybody understand what MACD tells us? MACD is a moving average convergence and divergence. The blue line and the gold line, let me just make them bolder so you can see them a little bit better. Okay, the blue line is called the MACD line. So I just made that bolder. The gold line It's called the signal line. Let's make that thicker for you. It's called the signal or the trigger line. When the trigger or the signal line crosses the MACD line, it's giving us buy and sold indicators. Okay. And what we see is a big mess, because what we have is the trigger line and the MACD line riding on top of each other at this point. That's telling you the market, the indicator can't tell you much right now. But what we also do is we have the histogram. The histogram is the green and the red below. It shows us the peaks and the valleys. And what we're seeing here is we're not seeing overbought or oversold conditions. Okay. If we saw a deep dip in the red here, that would tell us the market is oversold. A big rise up would tell us the market's overbought. If we see a big difference between the MACD and the trigger line, it might be giving us overbought. What it's telling us, the market still is maintaining its momentum. There is no sign that this trend is in jeopardy at this point. Now, it give us not a signal I would use, but it did give us a buy signal here. But whenever you have the two riding on top of each other, it's a little bit confusing because they usually cross over nicely. But that's one of the ways that we can see momentum. Another indicator, let's get rid of this one, is simply called the momentum indicator. So we'll go down to momentum. See if I can improve my spelling. This is in alphabetical order. And we've dropped the momentum indicator on the bottom of our chart. So again, let me make this a little bit bolder so you can see it a little bit better. And the momentum indicator fluctuates between 0 and 1, and 0 and negative numbers. Okay. As it rises towards the 1 level, okay, it's telling the markets have momentum. When it's easing back down, we are losing momentum. But in this case, the momentum is staying above 0 and now is gathering back upward. So it's still keeping its momentum. Actually, it's a big mess at the moment. It's not really telling us much of anything, except that this trend is most likely going to continue. We don't have any signs of trend exhaustion here at all. Okay, and we can probably, I haven't built on here a correct trend line, but we can probably see, because we can see the lower lows and the higher highs and the higher lows, push, ease, push, ease, push, ease, push, ease. So we see a beautifully well-developed trend. So let's take a look at a momentum strategy that we might want to apply.
Hello and welcome back, and today we will take a look at a very important concept, and we are going to take a look at momentum, how to find momentum. We'll also explore what momentum is and how we can use it in our own trading to find better trades. So first of all, let's get started with momentum. And when we are talking about momentum, we mean basically one of two things. Either it is a trend strength. So when we look here at this chart, for example, you can see price was in a very nice uptrend here. We almost did not have any bearish bars. It was just green bars here going up. So the momentum was up here, the trend was up, and then here suddenly the momentum faded, as we would call it, which means that this trend is running out of buyers. We are entering a sideways market, and here we don't have any momentum at all. Then when we look at a chart like this, we don't have any momentum in the overall picture. You can see that price is just going up and down, very narrow range, no real trends. But when we look a little bit deeper, we can see that on a micro level there is some type of momentum. So here you can see we do have strong bearish bars here at this area. Very nice downtrend in this sideways market. So you can see here momentum does not always mean that price is just going up in one straight line, but even within a range we can find nice momentum here, very strong candles here as well. And so we can find momentum in different areas here as well to the upside. We did have a very short term upside momentum, 1 2 3 4 5 6 bullish bars here with very little bearish bars in between. So this is also a classic momentum drive, but a little bit of a different way of looking at it. And then here's a nice example how the bullish momentum reversed to a down momentum. And now when we combine our micro momentum knowledge, where we just look at individual candles, how many bullish, how many bearish bars are there, how strong are the candles, and we combine it with our overall trend analysis knowledge, then we can come up with very nice trading scenarios, and we can understand price charts in a much better way. So if we start here, you can see price was in a very nice uptrend. Here we did not have any bearish bars at all, just green bars going up. Then here at this point we did have a consolidation, which is normal after a trend wave. Always or very often does price enter such a sideways market here. It gives the buyers and the sellers some time to make up their mind, will price reverse, will we go up? And so you can see at all the time we stayed above this black line, which is the 20 period moving average from the Bollinger Bands. So you can see as long as price stays above this moving average, we are in an uptrend, especially when we see such nice momentum here during this trending phase. And although you can see here that price did change here a little bit, let me mark that for you. It was the first time that we had more than one consecutive bearish bar. This does show a little bit of a downside momentum, but as long as we stay above the 20 period moving average, there's usually no reason why we should short such a market. So although you can see something is changing here in the market structure and the momentum, we do have more bearish bars here than what we've seen previously here during this uptrend. As long as we stay above this black line, everything is usually still fine, and then price continues to trade higher. Let me get rid of this for now. And here we have another trend wave with more bullish momentum. You can see that here multiple bullish trend waves again. And then here at the top, this is a classic pattern. It is a double or triple top with a few failed breakout attempts, a few candle rejections. This is not enough information to short yet, but you can see what happens afterward. Again, we have two bearish bars here and then followed by this huge momentum bar. So this is a very important microstructure and a momentum shift.
Okay, while we were watching the video, I took advantage and I updated the charts for you. And if you look right now, okay, what I've got is the euro US dollar. Let's drop it down. Well, I put it on a 2 hour only because you can see more of a movement here. I actually was able to go on and draw a validated trend line, which extends way back into last week. And here you can see we have it validated here. It's still holding the gold line. Actually, let's make it a better color for you. Let's make it a bright red. Okay, so the red line is the validated trend line. I've also gone and put Bollinger Bands on for us. And look at this. We're staying above the 20 period moving average in the center of the Bollinger Bands. The price is continuing to ride the outside of the band. Now, we had that ease down, if you remember right, but it didn't break below the 20 moving average of the center of the Bollinger Band, bounced off of it here with the low of this green candle, and now has moved back in the center and is moving back above. As long as price stays above the moving average, the 20 period moving average inside the Bollinger Band, it maintains its upward momentum. And you can see it's been riding this band all the way back here beautifully technically since August 13th. And it stayed above that moving average and has been trading absolutely beautiful. So this tells you this movement still maintains its momentum. Dropping it back to a 1 hour chart, we can see the same process. We see the same thing going on. We see the trend holding, we see the Bollinger Bands holding, and we see the upper price riding the upper band. Again, when I drop it back to a 30-minute chart, Just today, it's had a lot of sideways congestion. Okay, it's stuck. We see how narrow the bands came. That means the volatility's left the market. The market is very, but this is only today. This is from this morning till now. This is not, a daily pair. We're looking at a 30-minute chart. But we do have a break below the moving average, which if I was looking to buy, I would not be entering the market. And we could say maybe it's signaling a retreat, but I doubt it, because look at the new candle that just formed. The new candle that just formed is back riding the band well above the moving average. Okay. So we had 2 candles that closed right at the moving average, and then we had the green candle that far exceeded it, and now we're back riding the upper band. So what it's telling us is that momentum is here to stay. Now, like I said, I wouldn't enter a trade at we're at 119.444. We were at 119.37 before. Somebody could have made some few pips in that little movement. Now, the fact is, we have a perfect scenario here for you to decide what to do. Now, I know it's a little bit confusing. So if you look on your screen, there's a little handout slot. And I put together a handout giving you a whole momentum day trading strategy from step 1 all the way through the process. It's yours free. Just click the download button. It's a PDF file. There's nothing you have to sign up for, nothing you have to pay for, nothing you have to give any ID. Just click the download button and it's yours. I've also given you the technical analysis guide from investing.com, which is a great resource guide. They're only available during the live class. But remember, momentum is measured by continually taking price differences for a fixed time period. The momentum indicator is using that difference, the movement of the asset over that period of time. So since the momentum indicator does not have an upper or lower boundary, you must visually inspect the history of the momentum line and draw a horizontal line across its upper or lower boundaries. Remember, we were looking at that little momentum indicator that I showed you was above 0 on the charts earlier. There we go, down below. But a momentum indicator is a very hard thing to use. So I use, like I said, my MACD. So remember, momentum trading is a particularly popular approach to Forex. Momentum trading is a strategy that aims to capitalize on the continuance of existing trends in the market. The momentum investor believes in spotting large price movements. If you buy only when the price is moving in your favor with the hopes of selling at a higher price. So you got to figure out what works best for you. Remember, risk management is the ultimate key. Just because we saw an asset that's trending strongly, we saw the momentum carrying it forward, is where do we put our stop loss? What's our exit strategy? How do we capitalize on the moves? And how do we make sure if the market reverses on us that we don't lose our shirts? So remember, keep in mind risk. But here's a beautiful setup using the Bollinger Bands and understanding how to use the Bollinger Bands and when it breaks the moving average or stays above and rides the bands. So remember, like any solid trading, momentum trading is subject to risk. It's been found to be successful when prices follow on a trend, but on occasion, momentum traders can be caught off guard when trends go into unexpected reversals. So momentum is a key concept that has proven valuable for determining the likelihood of a profitable trade. Measurements of momentum can be used in short or long term, making them useful in all types of trading strategies. Several technical trading tools are available to reveal the strength of trends and whether a trade on a particular asset may be a good bet. However, traders should be forewarned that momentum projections are customarily calculated using measurements of past price trends. Actual momentum and price can change at any moment based on events that weren't factored into the original calculations. So keep in mind, manage your risk at all times. So thank you very much for joining us today. If you do have any questions, go to www.alvexo.com, click on their live chat button. Somebody will be glad to answer it, or they'll arrange for you to have a conversation with one of their education specialists or a financial analyst. So thank you very much and have a great trading day. Bye now.